Boom! Yes. Good morning, everybody. Welcome to 2025. This is the morning show. Happy, what day is today? Today's Thursday? I have no idea. I think today's Thursday. Morning show is back. We're back in the saddle. New year, same show, same market? Question mark? I don't know. We'll talk about it. Let's talk about it today. We'll have Jeff Hirsch on the show to talk seasonality, Santa Claus rally, lack thereof. I don't know. We'll have Mr. Kenny Glick on the show. Good morning, chat. Hope everyone had a great New Year's, whether you were low key in your house or out and about doing the partying. That's all good. We're back. We're refreshed. We have a new day. So let's go. Smash that like and let's get this show on the road. Where's JC? Where's Steve? Come on. Let's go.
All right. We are back.
Yeah.
The morning show 2025. Who's fired up, huh?
It's going to be a great year. I got a really good feeling about 2025. They're already.
Can we talk about how the S&P 500 is less than 2.5% from a new all-time high?
No.
What is everybody so angry about? Like, damn. What are they so mad about?
Can we talk about how cryptos are mooning to kick off the new year?
Can we talk about the fart coin? Fart coin, $1.5 billion in market capitalization, just an eyelash away from what would be the equivalent of a mid-cap stock. Shout out to the fart coiners out there. I am up I'm up like 250% on my fart coin.
That's fantastic.
I'm up 188%.
Oh, sounds like Strazza doesn't have any fart coin.
No.
Oh, that's a bummer. Was it too hard having to go to a decentralized exchange to get it for you, Mr. Strazza? Was that too difficult?
I'm happy with my Coinbase. I'm content with my Coinbase.
Dude, S&Ps are 2.5% away from a new all-time high, and the gloom doom out there is off the chart.
Who's angry, JC?
I'm very observant. I don't know if you've noticed, Mr. Spencer. I'm very observant of the people. I will say, however, sell-side analysts, the median return for 2025 among sell-side analysts is 12%.
That's bearish, yo.
They're very bullish. They're looking for 50% more returns than the average year.
That's isn't that what you call a contraindicator?
Right? No, it's more powerful when they're bearish. When they're bullish,
Oh, so we listen to them when they're bullish. Got it. Okay.
No. We're not listening to them. You just weigh it less. It just has lower weighting. When the sell-side analyst is bullish, it's like, well, what else is new? It's when they're bearish. Like 2 years ago, remember, the sell-side analyst 2 years ago, consensus was that S&Ps would fall in 2023. The first time this millennium that sell-side consensus was that S&Ps would fall in 2023. As it turns out, it was two of the greatest years in American history. So shout out sell-side analysts. You guys are great. We love you. There's very few that are still employed, so we should start a GoFundMe account to make sure that sell-side analysts remain employed. We need the data. We appreciate you guys. And if anybody needs help marketing the GoFundMe to keep sell-side analysts employed, you know where to find me. Too obnoxious to start the year or spot on, you think?
I think it's fair.
I think it's
cryptos look great. Notice where Bitcoin dug in and rebounded. Crypto's having one of their best days in, a couple of months now here since yesterday. Solana popping higher. If you look at things like HBAR, Cardano, Ripple, Algo, really nice coils there.
All right, Strazza, you got an echo, my man. Fix your echo.
What?
Yeah, I hear an echo. Spencer, can you hit the let's get into the cryptos, but I want to go over the futures this morning, including the cryptos, and then we'll talk about it. What do you say?
Yeah, all right.
All right. So we are looking at the Dow futures this morning, up 320 points to start out the year. 43,200, just shy of that, up 0.75% this morning for the Dow. Up 80 basis points this morning, up almost 50 handles. 59.85, the S&P 500 making moves. And the leader of the pack here is the NASDAQ 100, up a full percent this morning. That's over 200 points to the upside, 21,450. 30-year bond futures up again as rates are coming off, up 50 basis points for the 30-year, 114 and change. Crude oil up 1.25%, back above 72.5. Copper flat on the day, just above 4. Gold up 50 bips, 26.50 for the gold. Silver up 1.5%, just shy of $30 with the volatility index just above 17. Over in funny money land, Bitcoin up 2.4%. That's 96,600 for the BTC. Ethereum up 3.5%, just shy of 3,500. Solana 208, up 7% this morning. Absolutely ripping. Binance flat on the day, 711 for Binance. Total crypto market cap, Spencer Israel, $3.33 trillion with the Bitcoin dominance down to 57%. The lowest levels that we have seen in several weeks for Bitcoin dominance. How do we feel about this morning's futures?
Tell me more about this crypto mooning action.
Well, I got some charts. Throw up slide 2 there. This is the support, right? So the no coiners, right? The no coiners are very sad. Crypto added like $1.5 trillion in market capitalization this year, and so the no coiners were not able to participate in any of those gains, which that must suck. So for us, we are thrilled, obviously. Now, as far as what's going to happen in 2025, does this look like an epic top? Right? Is the Ponzi scheme over? Right? Like that, all those things, is it over? Or is it just finding support and just a healthy, well-deserved consolidation within an ongoing secular uptrend? My bet is that it's the latter. We start to lose those levels, start to make new lows. That would be a problem. That would be the first lower low, if you will, in Bitcoin. And so that would be evidence that, Bitcoin's probably going to stay under pressure for a while. So that would be a big level. That 90, we start seeing the 80s. It's pretty big problem, I think. And then why don't you zoom out on the micro strategies, the next chart there? It's a little obnoxious, but I think it makes a pretty good point.
I saw you tweeting about this.
You think it's a little too obnoxious, or you think this is spot on there? Bring in Strazza. Did Strazza fix his audio?
Yeah, I think he's okay.
Bring Mr. Strazza. Strazza, too obnoxious, or do you think this is fair?
I don't understand the question.
Do you think that a quarterly line chart for micro strategies is too obnoxious, even for me? Or is this valid? This is a quarterly chart of micro strategies going back 30 years or so. And it shows a micro strategy closing the quarter at the highest level in corporate history, which dates back to pre-dot-com levels. So I ask you again, too obnoxious even for me, or is this?
It's a little obnoxious. It's a little obnoxious.
A little obnoxious.
The only obnoxious thing for me is that there's no way to make numbers appear between 0 to 10 when you log your charts on Optima.
So I got a nice email from Matthew Verdau.
Mm-hmm.
Matthew Verdau must be done with his coding. When he gets locked, he locks himself in a room. He doesn't talk to anybody because he's coding, right? And that's fair. Listen, we all have our little, quirks, right? Strazza has his, certainly. I definitely have mine. Spencer Ovs, Matthew Verdau, he likes to code in peace. And if I were a coder, I would imagine that I might want to code in peace too. So I can't really blame him for that, right?
Big code guy, yeah.
Big coding guy. So shout out Matthew Verdau, reached out to me. He wants to have a conversation about all things happening in the world of Optima.
Yeah, that's great. We love Optima. Use it every day.
Shout out Optima. So not obnoxious. How about slide 5, Spencer Israel? Can you throw that one up there with the NASDAQ 100 leading the way this morning, up a stick, 230 points to the upside. I am seeing the highest monthly close in the history of the NASDAQ 100, highest monthly close in the history of the consumer discretionary sector. Mr. Steve Strazza, our resident economist, my understanding is that the United States is a consumer-driven economy. Is that right? Do I have that right?
It is big time. Yeah.
And so consumer discretionary as an index making new all-time highs, would you argue that that is a negative for this said consumer-driven economy, or is that a positive?
I think these stocks did make all-time highs in early December, if that's what you're referring to.
They closed at all-time highs. Discretionary and the NASDAQ 100, highest monthly close in American history.
On a monthly basis. But it was 2 weeks ago.
What was 2 weeks ago?
The daily close.
Yeah, well, we're talking about monthly charts, you see. That's what we do at the end of every month. It's like a thing around here. I don't know if you heard.
Here's what I think. I think
Chief YOLO officer only looks at the dailies now?
No. If they come in and buy them today, which it looks like they're going to, and by any measure, looking at crypto overnight, I think they will. But I think you just follow, in terms of like the tactical trend, follow whichever way they go at the beginning of the year. I think we're getting a big directional move. I think it's going to be up. And I think, you just lean into it. And if it's down, I think you lean into it too.
Can you throw up slide 4, please, there, Mr. Spencer Israel? So we're talking about the first 5 of the 7 days of the Santa Claus rally down across the board. I know historically the Santa Claus rally is more of an S&P 500 thing, but, in America, we get to do whatever we want. So I included the NASDAQ 100 and the Dow Jones Industrial Average, just for those who partake. And so the Santa Claus rally gets a lot of attention. We are incredibly fortunate to have a one Jeff Hirsch as our guest this morning to talk about seasonality, to talk about the Santa Claus rally. And one of the things that I'm going to press him about are the first 5 days of the year, which Steve Strazza was just kind of alluding to there. Steve Strazza, what is more important to you, the Santa Claus rally or the first 5 days?
First 5 days.
As they say, as go the first 5 days of the year, so goes the rest of the year.
Yeah, it'll be interesting to ask Jeff which of those 2 data sets.
He's going to cop out. He's going to be like, it's the trifecta. The January barometer, the first 5 days, and the Santa Claus rally. It's the trifecta. Watch. I guarantee you. Hopefully he's not watching because he's going to steal my thunder.
Yeah,
he's going to say, I bet you. We're going to ask him just like that. I'll let you ask him. And he's going to say, well, the trifecta. Watch.
Which is fair. So Santa Claus rally, what, JC? We have how many more days? 2 or 3 more days?
Today and tomorrow. That's it. And then it's over.
Wow. I don't know, man. Not looking good.
Well, S&Ps are up 80 bips, and we came into the day down 160. So we're 80 basis points away from a positive Santa Claus rally. And for your Dow Jones Industrial Average coming in down 80 bips, up 70. So we're 9 basis points away from a positive Dow Jones Industrial Average. And then the NASDAQ up 1% on the day, coming in down 2.5, 150 basis points from a positive NASDAQ Santa Claus rally. So I'm saying there's a chance, kind of like the Dolphins making the playoffs. There's a chance. They got a shot.
Do they really?
Dolphins got to beat the Jets, and then KC's got to beat Denver at Denver, and none of their starters are playing.
Yeah, don't hold your breath.
I know. But I'm saying there's a chance. What's this 1 in a million talk? Let me ask you this, Mr. Strazza. Could you imagine selling your stocks because of something that they call gross domestic product is unable to keep up with the value of the stock market? Could you imagine that being your justification to sell stocks? What kind of serial killer thinks like that?
So I believe you're making reference to what they call the Buffett indicator. Is that right?
Who calls it that? Does Warren call it that? Does Charlie Munger call it that? Or is it just like glorified gossip column writers?
You know the answer to that. So
am I leading the witness?
Listen, it's like any other sort of valuation metric. This is just his macro broad market valuation measure, and I think it makes sense. It's logical to think that there would be a relationship there. But Warren Buffett, like any other investor, all of the greats of all time, they're not right every time. They're not perfect. These guys, in fact, we have some of the best traders and investors who are still doing it on our podcast, and they talk about how their win rate is 30%. Okay. So they're not going to be right on everything. We were just writing about Warren Buffett, how he totally whiffed on Oxy. He's down on that investment. Now, this is the biggest insider buy of the last 2 years. Okay. Didn't work out. Warren Buffett, greatest investor of all time. They're not going to get everyone right. So I would say I would think about his indicator in the same light, right? It's not always going to be perfect. Warren Buffett's not perfect. Carl Icahn's not perfect. Steve Cohen's not perfect. Go Mets.
Let me ask you this. So Charlie Munger already makes our rest in peace. Already told everybody that him and Warren don't look at that at all. First of all. Second of all,
I'm sure they do. He talks about it. Warren Buffett talks about it.
Second of all, let me ask you this. Warren aside, let's just use some common sense here. And I'm not like Mr. Global Macro Economist and GDP guy and then the GNP, right? You got all that stuff, right? So I'm not that guy. So I'm legitimately asking. I'm not trying to be an asshole. I'm legitimately asking.
Yeah.
How can someone possibly want to sell their stocks because the gross domestic product of the United States of America is unable to keep up with the value of the stock market in America?
No.
Considering, correct me if I'm wrong, in particularly the largest companies that are very multinational, don't they generate a lot of their earnings and revenues from the rest of the world, not just in America? So you're going to compare these companies that are making their money all over the world, to the gross domestic product of just the United States? What kind of fucking serial killer thinks like that?
Well, that's included in the calculation, the business profits. But that's besides the point. Warren Buffett is using that measure as an indicator to either press the gas or come off the gas. Is all that is, right? He's looking at it and saying stocks are.
Pretty sure Charlie told us he don't give a shit.
Who told you that?
Charlie Munger.
Okay. If he did give a shit, all he's using something like that for is as a broad market measure to say, hey, there's probably opportunity in this market, right? I want to be dipping my toes in, accumulating shares, or there's more risk in this market. We're historically expensive. I think that's fine to have some sort of broad market gauge like that. I think you're okay with it.
Let me see. Do I have the actual?
I think JC's really coming around to fundamentals. More and more. Every year
fundamentals drive equity prices.
I think you think about them more every passing year. I feel it in the questions you ask. The thoughts you're having. You're going to be a fundamental analyst by the time you retire, aren't you? You're going to be.
Let me tell you something about operating leverage.
See, he talks about this stuff.
Well, when you own businesses, you start. I can't help myself. I got Danny Jassy sitting down with me for an hour and a half, telling me about my fucking balance sheet. I want to blow my brains out, but I'm there. Some of it sinks in.
He's diving into the financials.
Yeah, Danny Jassy's just telling us, how it is, and I got to listen. So I sit there, I pour myself a glass of wine. I'm like, all right, Danny, give it to me. Let's get this over with.
You're going to be on CNBC talking about the Fed with Bianco and JB before we know it.
Oh, that sounds terrible. I'm happy to hang out with Bianco and Josh Brown, and I got no beef with CNBC, but like to go into New York to be on basic cable, I wouldn't even know where to watch that channel. Like, you watch it like on the internet, like CNBC.com. Like, I don't even know.
When you go on Fox, have they ever asked you your opinion on FOMC? They have. What do you say?
What do you think about the Fed? The only people who ask me that are the people who don't know me. And then I just brush it off. It's like, yeah, none of that stuff matters. So anyway, and then I talk about like what I'm going to say. Like, that's the key. Yeah. For those of you who don't do TV, and if you ever get invited to TV, this is good advice. So know what you want to say. And then whatever questions they ask you, just say what you want to say. Just ignore their questions altogether, right? Like, especially on live television, because there ain't nothing they could do about it. Like, oh, JC, what do you think about this and Apple's earnings? So anyway, the NASDAQ 100, right? Like, That's the trick, right? So good advice. Anybody out there who doesn't do TV, just know what you're going to say. And no matter what they ask you, just say what you're going to say anyway.
It's some of the best advice.
It's good advice.
It's easy for us because we're used to coming on our shows and talking about whatever we want. So you just take that mentality
right
when you do interviews.
Spencer's like, oh, but JC, but the shut up, Spencer. Anyway, right? So, these poor anchors. These poor anchors, exactly. I just treat them the same way. Love you, Spencer.
Hey, Spencer.
I'm just chilling in the background here. I'm just listening.
Oh, you're doing a hell of a job, Spencer. You're doing a hell of a job, my man. Hell of a job.
I didn't do anything. Just minding my own business.
That's what we need you to do. We need you to do nothing, right? Just get the charts up when we tell you. Make sure Kenny's in the room. Is Kenny coming in today?
Kenny said, and I quote, I did not sleep well. So I don't think Kenny is going to be joining us this morning, sadly.
Can I just tell you how well I slept last night? Dude, I was in bed by 8.
Oh my God.
Crushed it last night, dude. Crushed it. I had crazy dreams, man. I can't even say what I was dreaming about out loud. This is not safe for work. I was having some dreams, man. Yeah.
Great.
Yeah, I think it was the Sambuca.
Steve, do you sleep better or worse in your childhood bedroom?
I usually sleep fine. Hasn't been great this trip. I did just get a new Apple Watch though, and it tells you when you're up too late.
Nerd alert.
Yeah. I don't know how to use it yet.
Steve Strazza, how many coffee beans in the Sambuca?
3.
Not 7.
3. Why? What's 7 for? I mean, I'm no expert on this.
Chat. Anybody on the chat? Anybody in the chat want to weigh in? How many coffee beans in the Sambuca? I'm a 3 guy. I think it's an Italian thing. There's like
I used to
like a Holy Trinity, but there's like a thing. Do Jews drink Sambuca? Spencer?
I was about to say I don't know if I know what that is.
It's an Italian. It's a liqueur. It's like anise. It's
anise flavored liqueur.
It's an after dinner. It's a digestif.
Yeah, when I used to bartend, it was always 3. I never thought too much about it though. I don't know why.
There are some people who do 7. Any 7s in the chat? Any 7s on the coffee beans for the Sambuca? Some people do 1. I'm a 3 guy.
I'll take a limoncello over a buca.
You sound like my father. My father just said the same thing. Limoncello. He had his first limoncello in like 20 years. He's like, oh, that's delicious. I'm like, yeah, no shit.
It's great. Yeah.
It's great.
Yeah, give me the limoncello. My brother had some like strange, I guess it's called a digestif. It's from Germany, but you drink it out of like a little nip glass after dinner and you like shake it into your mouth, like activate the whatever's in there. And let me tell you, they're supposed to do this. They're supposed to help you digest and like feel like you didn't eat anything after you just had like 4 bowls of pasta. And it worked amazingly. It was like magic. I couldn't move like out of the dinner table. I couldn't get out of my chair. Hit that thing. I was like ready to go run a mile. So I have to get.
There's a drink that they serve. There's a bar at the So what's the hotel in Vegas? Like the nice newer one.
A lot of nice hotels in Vegas. Bellagio.
Which one?
The Italian one?
No. It's across from the
I don't know.
From the what's it called? Across from the Bellagio or next to the Bellagio?
Venetian.
No, not the Venetian. What's the one right next door to the Bellagio?
I'm not a Vegas person, JC.
Dude, come on. I have 3 kids. I haven't been to Vegas in a few years. What's the hotel next to the Bellagio? Come on. I've stayed there a million times. What's the name of the damn hotel? Come on. I'm embarrassing myself here. The fact that I can't think of it right now. What is the name next to the Bellagio? The nice one.
I'm not a degenerate gambler like you.
Come on. I'm not a gambler either, but I stay at nice hotels. What's the name of the damn hotel?
The Luxor's not nice.
No, the Luxor's not nice at all.
Luxor's a
Come on, guys.
Yeah, I know that.
What's the name of the nice hotel?
Aria.
No, Cosmo. The Cosmopolitan. So at the Cosmopolitan. At the Cosmopolitan, there's a bar that's got like all of these like crystal chains and like these like spiral staircase like in the middle of the Cosmo. And you get this drink that's got this flour and you put the flour in your tongue before you drink the drink and it numbs your tongue altogether. So you're drinking the drink and you can't feel it in your mouth because your mouth is all numb because I guess the flour is like killing the taste buds or something. I mean, it goes away. It's fine. Like it's only a few seconds. The Cosmo. What's the name of the drink? Anybody know the name of the drink? It's really fascinating.
Okay.
For someone who knows nothing about cocktails. As a sommelier, I'm supposed to know about these things, but I'm not very good at the cocktail situation.
I would try that. I would do that.
You should. It's only like $25 for a drink. Oh man.
All right, we have Mr. Jeff Hirsch in the house.
Oh, Jeffrey. Jeffrey, who's
Yeah.
the better golfer, Jeff Hirsch or Steve Strazza?
Jeff Hirsch.
Definitely. Not even close, dude.
No, I'm getting there. Getting there.
Shall we?
Shall we? I guess.
I think we shall. Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Mr. Jeff Hirsch in the house, my man.
Happy New Year, buddy.
Dude, happy New Year to you, my man.
You know, we can't know who the better golfer is until we actually play against each other.
Oh, I've seen you both play. You're the better one.
No way. Really?
Oh, it's a low bar. It's a low bar with Steve Strazza.
I thought Steve had game.
No.
No?
No.
No. All right.
I mean, he's fine, you know, but for the amount of golf that this guy plays and the amount of golf gear and the amount of talking about golf that this guy does, he should be way better.
He should be better.
Okay. He doesn't know what he's talking about because it's hard to get him to play a full round of golf.
Well, you know, when we get together, our ADD kicks in, so we get distracted with all kinds of stuff.
I miss you, Jeff Hirsch. Happy New Year. How are you, man?
Happy New Year to you, man. What's this beard thing you got going there? Is that new?
The beard thing is I forgot my electric shaver when I embarked on this holiday road trip of mine.
So you're up north now?
Yeah, I'm at my parents' house right now.
Oh, cool. Cool.
Dude, if we get a nice day, Strazza, by the time we get a nice day, he'll be back down. But Hirsch, you live close to me. If we get a nice day, those random winter days that are super, one of my courses is open all year round.
You guys should.
Like they close the a couple of them obviously for the winter, but one of them stays open the whole year. So like,
awesome.
like ping me, like ping me randomly, be like, hey JC, it's gonna be awesome on Thursday. You want to play? You know what I mean? I'm down. Okay, here's the question to you. Are you ready?
Yep.
What is more important,
Mm-hmm.
the Santa Claus rally period, or the first 5 days of the year?
How much trouble are we in if Santa doesn't come? Is what he's saying.
Let him answer.
First of all, to answer JC's question, neither.
Oh, you said it, JC. You said it. He said you would come on this question.
You know what's most important.
I'm asking. You're the
the January barometer, the full month.
January barometer is more important than the other two?
Hell yeah! Look at this year.
All right.
Look, I mean, last year. Sorry.
Yeah, last year we were basically unchanged for the Santa Claus, right?
But positive January saved us.
Yep. All right.
So then, so then it goes back. So he was going to cop out. I told you he was going to cop out. I called it. I said you were going to say the trifecta. You didn't say the trifecta. You skipped straight to the January barometer.
It's the key. It's the linchpin of the trifecta.
So as goes January, so goes the rest of the year. Is that right? Do I have that right?
Correct, sir. We found it.
I have 2 stock traders almanacs on my desk, just for the record.
Yep.
I'm eating my own cooking here.
I got them both right here too.
24. I got the 25. And not because Jeff is coming on the show. It's just on the desk, you know. And I'm surprised the 23. The 23s are around here somewhere.
I got mine on my desk too. So Jeff, all right. So it's as simple as that.
You get them cheaper than I do.
I know.
Hey, Spencer, can you drop a link to the Stock Traders Almanac? If you take your portfolio seriously and you don't get the annual Stock Traders Almanac, like we can't take you seriously.
I use the little calendar in mine. Like I'm using it every day.
It's a little aggressive.
The note taking?
No.
Strazza reads the daily quotes to his girlfriend.
I love that. That's my favorite part. That's my favorite part. I love the daily quotes. So yeah, whatever.
I read them. I like them.
It's fun. You write them.
I think it's nice.
I pick them.
Have I ever been quoted? I don't think I've ever been quoted in the Stock Traders Almanac.
You know who has though?
Who?
The Pearl.
The Pearl.
Dog.
Which one? The behavioral finance one?
No.
People are crazy.
Like, you know, the kind of nobody, you know, like what is the one with I put it on it was something about like being in touch with people you like. I think I put it on Valentine's Day. Was that last year? It was one of those like lovey-dovey ones.
Phil's in
There's
touch.
there's a couple of Perlman quotes that need to be in the almanac.
Savor the joy of others. It is
one of them
abundant
is-
and free, and it will lift your spirits and boost your well-being, even as you add positive energy to the world.
That's a good one. How about here's Phil Perlman. Whenever you think the world is coming to an end, go for a walk. That's a good one.
Something about nobody gives a shit about what you think. Also, I have in there.
And then here's the thing about behavior economics: people are crazy.
Yes.
Another good one.
Kind of yeah.
Pearl Dog should get a couple of quotes. You know,
he's a deep thinker.
Yeah.
It's
Who's
like
a
Jack
better
Handy.
golfer, Phil Perlman or Steve Strazza?
Definitely Steve Strazza. Definitely.
I don't think Phil plays that much. He said he'll play with us, though.
Yeah, he said he would. He said
he'll come in and watch us eat hot dogs and drink beers.
Yeah,
that'll upset him.
And just like shake his head.
Just come make us feel bad.
I'll probably
I have dinner with Perlman, and I'm ordering like lunch with Perlman, and I'm ordering sake with our sushi, and he's just looking at me, judging me. He's like, "You degenerate, drinking sake at noon. What else are you supposed to drink with sushi?
Tea, the free tea they give you.
Gross.
Ice water.
Listen,
anyway,
back to markets. Markets open. New year. You're telling me that the January barometer. Okay, so if you had to order it, first place, second place, third place in terms of importance, is it the Santa Claus rally, which includes the last 5 days of the year and the first 2 of the following year? Is it the first 5 days of the year, which is what it obviously sounds like? Or is it the January barometer, which you're saying that that's 1? So what's 2 and what's 3?
I'm going to go trifecta first, hitting all 3 of them. Barometer, Santa, first 5.
Wow, Santa over first 5.
Okay.
The turn of the year I find important. I think there's a little something there with beginnings and ends together. Thankfully, I mean, you guys know we lost Jimmy Carter. They're having a holiday presidential market closing. Thankfully, it's the 6th trading day of the year. I mean, Jimmy hooked us up, didn't mess with our indicators. So
that's probably why Biden decided the 9th, because he didn't want to screw that up.
He's got an almanac. I sent him one.
This will be the 3rd week.
Will you send one to the White House? Because you should.
Where's it gonna? It's gonna end up, nowhere.
You never know.
Go ahead, Steve. You got something there? Steve,
no,
serious.
It's the 3rd week in a row where trading's interrupted.
Yeah, I mean, I think I sent you guys a chart of the 68 analog, which has me a little concerned. I know everyone's concerned about Santa, and people are lining up the days, and our friends, Ryan Dietrich and others have put out some definitely. And Ari, you guys posted a thing from Ari Wald. It's all great stuff, but Santa Claus rally, it's the whole 7-day period. It's not all the days lined up. It's not the first day. We see where we are at the end, from the close of the 23rd to the close of the 3rd tomorrow. But this is a little concerning to me. I just kind of updated this. Some of the talk about, post-election years and Republican post-election years and Q1 and post-election has been coming around. 1969 kind of looms in my head a little bit. It's on a page in the Almanac. I think I sent you a clip of that. The post-election years are worse for Republicans or better for Democrats. Kind of has me concerned with this kind of, similarity with 68. We had the incumbent dropout, though admittedly much earlier. We had a Chicago convention. We had similar patterns here. And then this selling off here in December, understandable profit taking after such a banner year, still up 23% for the S&P. But this action, just end of December, we don't like seeing December so weak. So, I think with as we've talked about, seasonal patterns not, bullish seasonal patterns not working can be a little bit of a bearish signal. Remains to be seen. I know you guys track breadth and highs and lows and the small caps. I think I sent you the updated small cap seasonality too. There's definitely, everyone's concerned about we haven't seen a new high in a Russell since, over 3 years now. We're looking for some broadening of this rally. I mean, hope is not a strategy, but you hope that some of this profit taking resets the bull and it's just a corrective period. So this, 68 analog sort of just keeps a little check on us, of what we're looking at. Still have a bullish outlook, not as bullish as this year, for as last year for 25, but inflation's got us concerned a little bit. The 10-year, I think I was asking if you guys could pull up a comparison of the 10-year and the S&P. I think these yield levels have definitely weighed on the market. So I just, some of the concerns I'm looking at, we don't want to be all rosy and perma bullish or perma bearish, but there's concerns out there.
Jeff, when you think of most important months, I want to say January is probably number one. Is December too, though, in terms of like what months you really want to see the market do well?
I mean, it historically does well, and you want to see the market do what it historically does to track the trend. I mean, we've discussed this many times, the three of us. I know JC and I have been talking about it for how many? 20 years? When seasonality doesn't happen, something's going on, right? So December, I think that's a valid point. And I would say, the best 3 months there too, November, December, January, important to look at that 3 month span. We did get a real strong November. Maybe it pulled some forward. I don't necessarily subscribe to that mentality. I think gains beget gains, but somebody just threw up July. That's interesting. July, beginning of the second half. I think it's worth mentioning. I'm sorry, I'm seeing the side chat. Forgive me for laughing.
Can you throw up slide 2, please?
Dr. Horton makes a good point.
This is the S&P 500 last year overlaid with the U.S. 10-year yield. What are you seeing here? What does this mean to you?
Well, as the yields picked up there at the end, you see S&P weakening. I think it was even more pronounced with the small caps and the Russell. So, I mean, we've had a line in the sand, not necessarily in the sand, but a line at 4.3 for 4.3% for the 10-year as being that sort of area that puts the market in a little trouble here. I think this is the bond market telling the Fed to, maybe go easier, don't cut so much that we don't need to be. Inflation may still be an issue. So I see, when we start getting up through 4.3, you see the S&P, stall and weaken and have some trouble there at the end of the year. Again, back in November, you can see when it ticked up there, a little corrective phase there. I think this is something to keep an eye on.
But Jeff, the 1-year yield is making new multi-month lows. Twos aren't making new highs either. It's really just the 10s and 30s, the long end of the curve. So if we're talking about the Fed, the short end of the curve isn't going up at all.
It's not. That's positive. We're getting some spreads there, but I think the 10-year is the real benchmark that everyone looks at, and it's kind of the most I guess liquid or traded or really relied upon. Is really what things are based on, and I think that's more the benchmark that the market looks at.
I think this is great. What you're saying, Jeff, and Brian Harris in the chat is asking a question. This is what I'm thinking too. He's saying with regards to yield, is it the absolute level or the rate of change? In other words, with most things, it's the trend. It's the trend, not so much the level that becomes concerning. Mm-hmm. But it's almost like with interest rates, it's the level, not the trend. It's almost like, you looked at rates here, go from 3.6 up to 4.5 from September through November.
Rallied right through that.
And the market was fine. Now all of a sudden it's like we're at new highs, and now it's a problem.
Yeah, that's kind of what I'm trying to point out here. It's not a perfect correlation, but this is what I think has the small caps down. I mean, I think we kind of all agree on that, and this is what's got the market a little bit concerned. And I think the Fed, tried to reset expectations. I'm still not convinced they're only going to do 2 next year, but there's inflationary pressures out there still, and I think that's what's really driving some of this correct. That's why people are taking profits here. That's why people have taken some money off the table, because there's concern that next year's not going to be as easy, and it's not. I mean, you've been talking about it too. It's really hard for it to continue to be 20% plus year for the S&P.
So this was, forgive me for reading the Wall Street Journal this morning, the best back-to-back period.
I love how you're apologizing for reading the Wall Street Journal.
I love the Wall Street Journal. Best 2-year period in 25 years.
Yeah.
And like the 4th best in American history, something like that.
Pretty good.
Kind of hard to top that, isn't it?
And then remember that consensus from the sell side 2 years ago, before that period started, was that the S&P was going to fall. The first time consensus was S&P going down.
Not in this group.
Obviously, we were balls deep. Are you kidding me? Are you kidding? I don't remember ever being that long. We were in, man. I mean, to not be buying stocks going into 23, like you had to be some kind of crazy person.
Especially in October 22.
Dude, how are we not? Like, I remember telling Maria Bartiromo on live television in October of 22 that we were in a bull market, and she looked at me like I was fucking crazy, bro.
You were saying it back in June.
They made a meme out of it. They made a meme out of her face. Shout out, Maria. Love you. She's cool.
She is. So, we have some new issues with the change in administration. I think while the market celebrated the decisive election and the fact that we've got some, change potential with the economy and some of the social stuff, we're still looking at some uncertainty with this with any new administration, and with particularly one that's promising to really shake things up, or at least threatening to, or talking about it. I mean, I'm all for change and cutting costs and cleaning up the government and stuff, but it's definitely potentially upheaving. I think
that guy Joe Lonsdale. You know that guy?
Yes,
Joe Lonsdale, the Palantir guy. He started 5 unicorns or something like that. So he has a decent track record, I'd say. He compared the U.S. government, because now all his cronies are getting into into the White House and all that stuff, and they're cleaning shit up. All like his drinking buddies or whatever. The way he says it is like, think about the worst Silicon Valley company of all time, right? That bad Silicon Valley companies just go to zero, founders move on, right? And it's dead and it's gone forever. He's like, the United States government is like, if you took the worst Silicon Valley company and instead of just letting it die, investing more and more every year, and then taking the worst part of that horrible Silicon Valley company and investing the most money into that portion of the company. He's like, that's what the U.S. government is. Like, the way he put that, I thought was, I'm not like, I don't know anything about government. I don't want to know. It's not my problem. But I thought the way that he expressed that was rather entertaining and scary at the same time.
Cleaning that up is going to be rough.
Yep.
Yeah. There's an addiction to spending there. And, they're not working together.
I think what he's saying, I think his big point is that nobody's held accountable. Like some guy someday, decades ago, decided it'd be a good idea to do this one project, and then nobody ever revisited that situation. So they just keep sending money down the toilet, and these people don't give a shit. If there's no accountability, they're like, oh, I get my check and my pension or whatever communist thing that they got going on there.
Congressional term limits.
Oh, can you imagine?
They're going to, both sides are going to hate the Doge by the time they're done. It's going to be very
the coin or the organization?
The organization.
Yeah.
How could you hate the coin? Come on.
People do. I don't know. People are weird.
I mean, we didn't even mention it. I wasn't thinking about it, but Bitcoin's, look, you put a chart out. Was that this morning, JC? The kind of potential top?
That's what I keep hearing.
It's a little struggling there as well, like the market. I mean, I think Bitcoin and the cryptos track the market with a bigger, alpha, bigger beta, whatever, but it's definitely a concern there as well.
Can we get into the post-election years?
Sure.
You have a theory, and your theory is based on mathematics, which I respect. You have a theory that post-election years, and correct me if I'm wrong, I don't want to put words in your mouth, but we talk a lot, so I remember things. Post-election years historically are not the best years, far from it. However, in recent decades, that has shifted somewhat, and your theory is because these presidents can't get anything done. So it's hard to piss people off at the beginning of the terms, which before they would. How close am I?
You're close. I think, the parties are becoming more similar. I know there's some ideological differences this year, especially, but really they're all spending a lot. Republicans haven't been as fiscally conservative as they used to be. And we're seeing a trend of, post-election years being much better based upon the fact that nobody's getting much done. And then they really try to push for it before the midterm, which I think is a key thing here with this new administration. They got about 2 years or less before the midterm elections to get done what they want to get done before the, notorious flip in House seats, especially. So there's only one line here that's of concern: the incumbent party losses, which we did have. However, we kind of had a almost an incumbent party win. If you skip a 4-year cycle in between there, we have the first president getting reelected after getting voted out since Grover Cleveland, I think 100 some odd years ago. So it's kind of the 5th year of the presidency. This one, we were on track with all the seasonality here, this 4-year cycle one, but you can see the end of December. There's a couple of ticks missing from here, but that's a concern there. We've got some, you can look over to the left side of the menu over here where the post-election year pattern, we've got some definite issues in the first quarter. There's been a few people pointing that out there in the Twitter sphere and other places about the Q1 of post-election being weak. I mean, this is one of the weak spots I'm concerned about for 2025. I mean, my outlooks for if the previous chart, you can see the 8 to 12% range of the different post-election year seasonal patterns. But my concerns are in Q1 and Q3, the usual seasonal weakness in Q3. But new administration's coming out, changing things, kind of puts some pressure on Q1. And we may end up experiencing some of that. While we can still expect average bull market gains for the whole year. I think the first quarter, the first 100 days, like we talk about the presidents, can be troubling for the market here, and we're seeing some of that. I mean, I don't know how the futures doing this morning. I haven't looked since we got on the air.
Futures are ripping. It's a bull market. Jeff, talk to me about February. What is it that you got the best 3-month period of the year, November, December, January, well documented, and then you get that dip into February. Why is that?
Well, I mean, you're coming off of the 3 best months of the year. Usually there's a gain. People reassess the outlooks after they see what happens in January. And it's kind of that pause. I mean, it's also cold. It's the depths of winter. This is the earth everything's pretty much in the northern hemisphere, pretty much. So you've got those winter blues, you've got reassessing, and it's a break after 3 strong months that are historically strong. And that's that weak link. Excuse me, that weak link in the best 6 months.
A little lull in the action.
Yeah, I don't know if I buy that.
No,
February
blues, but then what about March? The winter blues don't really set in until March, where it's like St. Patrick's Day and everyone's getting drunk outside, and it's like, oh my God, spring is here. Then you get punched in the face with winter. Those are the winter
March
blues.
has end of Q1 pressures, the quarterly maneuvers of institutions and that sort of thing. Beware of the odds, as we say.
Yeah.
JC, what did the winter do to you?
I'm good with winter. Winter doesn't affect me that much. I'm feeling pretty good. I'm going into my 43rd birthday. Lighter than I've been in most of my birthdays over the last couple of decades.
You look great.
The kids keep me in shape, to be honest with you. I mean, that's really the truth. I mean, it's like a cheat code. Having kids keeps you in good shape. It's kind of wild. It's true though.
Chasing around.
Great. Like in my 20s, my back would hurt, my knees would hurt. Why? Because I was sitting at a desk and drinking every night. Right? Now I'm not sitting at my desk. I'm walking around a lot. I'm carrying kids all the time. I'm not drinking anywhere near as much as I used to back in my 20s. I feel great.
I think both of you hit new highs in terms of your health in 2024.
Oh, for sure.
Yeah.
Way
better than I do, by the way.
Yeah.
I crushed it. I'm going to do it. I'm going to new levels this year. That's a whole other thing. He's going to start
playing rugby again, Jeff Hirsch.
Maybe.
Show these young kids how it's done, Jeff. Right?
They still don't know how to tackle.
I want Jeff Hirsch on our team.
Did you coach your kids at all, Jeff, or no?
I did when they were younger.
Yeah.
Admittedly, I'm more coachable than a coach, you know.
Yeah.
So once they get to a certain level, I got to hand them off to somebody who's real. I mean, I'm kind of like, tell me what to do, and I'll go in there.
Right.
I don't like to think about too much on there. That, and I play a position where I end up smashing my head into people a lot. So,
okay,
I can't be good. So let's talk about how long this bull market has been around. We're looking at
not that long.
You know, depending on where you start, I would argue we're 2.5 years in. Some might argue two years in a couple of months. Either way, we're year 3 of a bull market. When you talk about duration, when you talk about performance, we're still below average in duration. We're still below average in return. Does that mean that there's still legs to this bull market, or you think that doesn't matter?
I think there's still legs to it. We have a page on bull markets in the back of the Almanac that you may refer to. Page 133.
Page 133.
And 134.
I like this. This is like book club. So if you're following along at home, open up your Almanac, page 133.
Open up your missalettes to 133.
So we have the bull market starting on October 12th for the S&P of 22, September 30th for the Dow, and December 28th of 22 for the NASDAQ.
Yeah, I think you measure it from the index, just using the index lows, JC. That's the most standard way to do it.
Yeah, that's a dumb way to do it, I think.
What you like the new highs and new lows thing? You were talking about June 22 is what you had spoken about back in the day.
Use a market
listen, the bull market starts when the bear market ends, and the bear market ended in June of 22. So the bull market started then. No,
I think the bear market ended in October.
Like the bear market ends, and it's purgatory. Then the bull market starts. Like,
why do you say June again? What makes you say it ended?
That was when the new lows list peaked.
The new lows. That's right. That's right. That's I don't mind that. I think that's a little early, but I think it's a reasonable way to look at things.
I think it's the right answer. The problem is nobody else is measuring it that way. So we're out here measuring it one way, and the rest of the analyst community is measuring another way. Then we don't have
fuck them.
Yeah, it's annoying though. All right.
Yeah, I think it's annoying. I think it's October. That and October, has that history, that legacy.
Listen, if there's gonna be a purgatory, it was June to October. I think we could all agree on that.
Yeah, that was where it all bottomed out for sure.
What inning are we in?
And look at those months that it did it in: July, August, September.
And here's the thing about what inning we're in. Think about what inning we're in.
I'm just asking.
My grandfather once went to a Yankee game that went 23 innings.
Not normal.
Well,
they don't have that. They don't have that stamina anymore.
Just saying. I went to an All-Star game in 2008. The Major League Baseball All-Star game in Yankee Stadium, the last year Yankee Stadium, and that went like 18 innings or something like that. That was crazy.
They gotta pull in like Paulie O'Neill from right field to pitch or something, right?
Yeah, something like that. Yeah, 2008, great year. That was the best year of my life for a long time until I
don't understand your point. I watched a football game yesterday that went into 2 overtimes. That doesn't mean that I should expect most football games to go in overtime.
That's right. You're right. And we don't live in an average world.
Game that was like
everything's an outlier.
The game after that was
terrible. I'm not watching today's game. Too much college football. I don't know about this playoff system, guys. Like it's like college football is never ending.
What happened to all the games on New Year's Day?
I know. I kind of like the bowl system. Is that a crazy thought?
No,
you're the only one. Yeah.
All right. So Jeff, what inning are we in based on all of your historical studies? If you had a guess, are we in middle, later? How late? Are we going in? I
think we're like late middle,
Yeah, okay.
6th, 7th inning. I think I'm expecting the bull market to start waning a little bit. I think we still have a full year of it, roughly. I'm concerned about 26. The midterm year, we talked about the post-election year, not being so bad anymore. Midterm year still stayed rough, and I think we're setting up for that. I mean, something could rock the market here in 2025. There's plenty of exogenous, geopolitical other events that could happen. There's things in the economy that the Fed could miss. We got inflation and that stuff that I mentioned earlier, but I'm not really concerned that until we get into 26 for the bear.
I'm on board with that. I'm okay with the bear market in 2026. JC,
Jeff, can you talk to me about seasonality and cycles of international equities? Is there anything there in your work that you've noticed that could be of value, or is it just all over the place?
It's not. It kind of tracks the U.S. I mean, some markets have their own idiosyncrasies, their own personalities with their cultural schedules. Like Chinese New Year type of thing. We'll get in there, but for the most part, it's really tracking the U.S., which is kind of.
What about relative? What about relative? Like small caps, large caps? We're in that season. Like, is there any international domestic ratio that's?
I don't have anything. I mean, it's definitely something we should look into a little bit more. I think it's a good point, but nothing I have offhand that's really significant to me.
Yeah, we bring the tough questions, Jeff. We don't just serve
tough
up
and good.
alley-oops. We start with the alley-oops and then we get harder.
Jeff, I'll never forget when you were bullish Dow a few years back. You had a strong preference for Dow over the other indexes back in late 2022. Anything like that today? Do you have a preference? Small over large, large over small, growth over value?
I think technology is set to come back. That's what's driving the super boom. That's what is changing the world. There were some things I read over the break about AI really being that technology that touches everybody individually, that culturally enabling paradigm shifting technology I talk about, where it affects the world collectively and everybody individually. Like the internet, like the microprocessor, like the internal combustion engine, like indoor plumbing, that kind of stuff.
It's a nice story, when bull markets come with this, increase in overall efficiency or utility for the economy.
Yeah, when I start to use it, something's going on. So I've been starting to use it a little bit. Not enough with the seasonals and research, but in life, I'm starting to use it a little bit, and I'm seeing everyone jump on it in the house. So something's there.
I just went and got the new iPhone. I want to do all the new AI things. I want to play with the toys. I think it's important. Yeah, you got to do it, or we'll get left behind, guys.
Don't be a Luddite.
That's right.
Don't be a Luddite.
Jeff Hirsch.
Can we get a final trade from Jeff Hirsch, Spencer?
Yeah.
Can we get a final trade? What are we buying
coming into the year? He likes the NASDAQ 100. He's a classy guy.
Make him a classy guy. That seems a little skanky.
We got a copper trade. COPX I own. XES, the oil services.
Any
XES. Hold on. XES, oil services. Okay, Jeff, I see you, dog.
How about the what do you call it? The free lunch scan?
That's out there. I haven't gone back and see how they've done. It was a rough small cap period over the last couple of days, last few weeks. But we put out our list to our subscribers on the Saturday after the was it the 20.
Were there any themes, like any interesting themes? If I had to guess, there were a lot of biotechs. Rocked.
I'll go. Let me dial it up for you.
Dial it up,
and then we'll tell you, because I don't remember there being a lot of biotechs. Let me see here.
Oil and gas stocks got crushed.
XES. Yeah. Who quotes the XES?
I love that. The equipment names. Look out.
That's our oil sector seasonal trade. We also recommended XLE. I just picked up the XCS personally. It seemed like it had a little more juice.
Yeah. We just got long USO.
Yeah, well, that might be a little bit early, but that's in the same season where Top Golf was one of the
Mod G
free lunch stocks.
I got a gift.
Top Golf is up like 10% this morning. I should mention.
So I got.
Thank you, Spencer. There's a couple of pharmas on there.
Yeah.
There's some energy. Yeah, health. One of our old recommendations, Excelis Tech, is on there. That's a little tech stock.
Yep.
All
right, Jeff. Don't give it all away.
Don't give it all away. Go get the Almanac.
There's 26 stocks in there. It's at StockTradersAlmanac.com. It was the 21st. You know that triple witching. Can I still say triple witching? Or do we have to say quadruple witching now?
Triple is fine.
All people get very sensitive about things these days.
I know.
Everyone's
Everyone's
the link is in the chat and description to get the Almanac, guys. Jeff,
you're offending the witches out there, Jeff.
Jeff will be on our channel soon, coming up. Stay tuned for more announcements about that.
Yeah, man.
But thanks a lot,
Happy
man.
New Year, fellas.
Thank you, Jeff. Love you, man. Golf soon. Let me know. Would you see good weather?
If
He's
there's
not far from me.
If there's a bear market in 2026, like he says, that'll be a great time. We'll play a bunch of golf. JC, we'll teach you how to actually play golf.
Dude, I know how to play golf.
You don't know how to play golf.
Okay.
Yeah.
Dude,
You want a high score, right?
I have so many hot
That's
dogs.
usually how I golf.
I pick up a lot. Just
I'm
keep it
coming.
moving.
I'm coming to see you today.
Today?
Yeah.
I don't think I'm going to be around today. Are you
Stop
really driving
with
through here today?
Got gifts
Come
for the
tomorrow.
kids. Drop them
Come
off.
tomorrow.
I can't come tomorrow.
I'm not here today. All right.
I should mention, Steve. I'm literally on the way. Just so you know,
I didn't say I was coming to see you, Spencer. I got 3 stops to make.
I'm on the way.
People from Connecticut don't like New Jersey. People from New Jersey.
I'm not
don't like
even. You
Connecticut.
don't even have to
Too many
make
rivers.
That is not true. I have a profound respect for the great state of New Jersey. No qualms with Jersey here.
New Jersey, underrated state, New
so.
Jersey.
The way you feel about Philadelphia, I feel about Jersey. Jersey, I'm good with Jersey, baby.
At least fine.
Philly's disgusting.
Excuse me. Who hurt you?
So
Okay.
we're gonna do recess.
Yes, hit it.
Yeah, I just want to mention Tesla deliveries. Tesla's down, what, I think 4% this morning. The Q4 deliveries came in below the estimates there. And then also their
I didn't even know they still made cars.
annual deliveries dropped year over year. First time that's happened for Tesla. So thought that was interesting. Okay. You guys want to do recess? I mean, we can do recess.
Hit it.
All right. I'm bringing the recess thing up.
New Jersey has tremendous character as a state. Really does. Anyway, so we've been playing at my parents' house. Families all getting together, and we're playing games. However, nobody wants to play Monopoly with me because I don't miss. I don't lose. I'm not fun to play with. I understand. Monopoly Deal is like an abbreviated version of Monopoly. It's a card game. It's card style. No board, nothing. You'll never play Monopoly again. We've been having such a blast playing this little card game called Monopoly Deal. So
I've played before. It's good.
Yeah,
it's Monopoly, but fast, which is why I like it.
You're done in like 20 minutes.
Also based in New Jersey.
See? There was a theme there to my recess. I might stop in New Jersey and pick up some sausage.
I watched a documentary recently on why people hate New Jersey so much.
They have a documentary about that.
Where?
Huh.
On the YouTube.
Oh,
On the YouTube.
okay.
And it really boils down to the fact that, you know, 2 major media centers, New York City and Philadelphia, right? Particularly New York City, but Philadelphia too, for that matter. When they reference New Jersey, they're referencing what they see on the other side of the river, which is shit. You know, the New Jersey part, for the most part, outside of Manhattan, is not the best part of New Jersey. Far from it. Same thing with Philly. Even worse when you look the other side of Philly. That part of New Jersey is like horrible. Like, don't ever go there, right? So that's part of it, number one. Number two, in the olden days, the wealthier folks would live in the major cities, and the poorer folks that would commute in lived outside. So there was that. But when you go to the rest of the great state of New Jersey, underrated. Good eats.
Yeah.
Good people, and the further away you get from the city, the better the people get.
It's just that the stretch of I-95 as you approach New York is a comical wasteland of swamps and industry and smokestacks and train tracks and cargo storage. There's nothing there. It's it is a wasteland, right? Like,
which is fine. That's the case in some areas of a lot of states. There's also
and that's what you see.
New Jersey.
That's what you see if you drive into New York. That's what everyone sees. So, you know,
even
it is what it is.
Sopranos at the beginning, right? You know, I woke up this morning.
That's right.
Yeah, that's where they're driving through. Exactly what you guys are describing.
That's right.
Great sandwiches, great pizza, good beaches. There's even a casino. Shout out New Jersey. Giant Stadium.
You don't want to go to that casino. You want to go there.
All right, my recess. Quick shout out. Oh, quick shout out to all the great Middle Eastern food, Mediterranean food in Southeast Michigan. I missed it. We don't really have great Mediterranean food where I live in New Jersey. We have a lot of other stuff, but not really that cuisine. So the Mediterranean food, the Greek food, oh, so good. Southeast Michigan, you have my heart.
Ceviche, I want to give a shout out to Ceviche. I'm going to step up my Ceviche game, and I was really upset with myself how much I've been slacking on my Ceviche game, and fish in general, I'm not eating as much as I used to. And the reason is because, and I realized it this week, the reason is because when I lived in California and I would go to the Sonoma market, which is like the greatest market ever, the meats and the fish were all right next to each other. So I'd be like, oh, let me get some bronzino, let me get some ribeyes, right? I would do the whole thing. Now that's no longer the case, right? I got a butcher and then I got a fish market that it's one step further. That's the reason I've been slacking on my fish game, and I'm not going to let that. I'm going to overcome that this year. I'm going to step up my game. Shout out Ceviche.
New Year's resolution, more fish.
More fish.
That's great. Shout out grinders. All right, guys.
All right, options jam session at noon. Chart request live at 1. And we'll see you guys there. Smash the like. Thanks for watching. Thanks, Jeff Hirsch.
Break on multiplier 11.
What?
Ooh.
Break on multiplier 11, right?
I believe so. We also have our meeting then. We'll figure it out. See you guys.
All right.
Bye.
Run it.